Hello, everyone. Welcome to the Resilience and Adaptation Summit, brought to you by Better Insurance Network and our charity partner, Soil Association. I'm Anthony Ireland. I'm founder of Better Insurance Network. And today we're looking at the critical topic of resilience and adaptation. Adapting to climate change, mitigating risk, building societal resilience are all critical if we're going to build a prosperous future as a society. But they're also critical for the viability of the insurance industry because they're critical to maintaining our profitability, and it's critical to ensuring that assets are insurable in the future as well. So this is a really key topic, and it's one that's sometimes overlooked or dealt with in a silo. And today we're going to try and come up with a few practical insights that will help people think about how they can build resilience and adaptation into the day-to-day insurance operations and underwriting in particular. And building resilience through risk management and mitigation and providing a safety net, of course, financial safety net through indemnity is what we do as an industry. That's kind of in our DNA. But we need to be more proactive in building resilience and adaptation into what we do, working with clients to help them, because changes to the climate are now baked in. We're not going to completely eliminate global warming. There will be continued temperature rises for some decades to come. So it's essential that we start to take climate adaptation seriously and really ramp up our efforts. Now, today we are kicking off with a fantastic and inspirational keynote speaker, Ekosway Iyahan, who is Secretary General of the Insurance Development Forum. And the IDF obviously are all over resilience. They do really important work on sustainable development and the role that the insurance industry can play. And resilience and adaptation is absolutely central to many of their initiatives. So there's probably no one better placed to kind of look at the big picture and set the scene for us on why we should be taking resilience very seriously. And so I won't eat into her time. So I'm going to hand over straight away to Ekosway and then rejoin you to get back on with the conference. But Ekosway, thank you so much for joining us. I'll hand over to you.
Thank you, Anthony, and really thank you to the Better Insurance Network for the work you are leading within this space and also for the invitation to this summit. Clearly, the theme of the event, resilience and adaptation, is one that's central to me both personally and professionally. And I imagine it's the same for most of the guests who are dialed in today. So professionally, it also converges, I think, quite nicely with the work and the mandate of the Insurance Development Forum. And for those who are dialed into the meeting today, it's a public-private partnership, the IDF, led by the insurance industry and co-chaired with the United Nations Development Program and the World Bank Group and other international organizations. And the reason why it matters for the conversation that we are going to have here today is because its mission is to expand the use of insurance and related risk management capabilities to build the resilience of communities, businesses, and countries and contribute to the Sustainable Development Goals. Central to all of this is obviously issues around resilience and adaptation, and I would also say the protection gap, a jargon that we often hear across the insurance industry. So in terms of my remarks and my reflections over the next few minutes, I would obviously like to focus on the theme of resilience and adaptation and bundling that with protection gap, but really trying to focus on two key elements. In the first part, I will offer some reflections on the context of the world today and why addressing these issues are so critical at this point. And then I would then like to offer some reflections that turn towards focusing on why this matters for the insurance industry and what it means in the context of providing better insurance. So for context, over the past 3 to 4 years, I think that we have seen an apt demonstration of the deep weaknesses that exist in our societies, both in terms of social and economic systems as relates to resilience and the need for greater investment in building resilience and adaptation right across the world. Former Singapore Senior Minister Tharman Shanmugaratnam described the current era that we are in as an era of profound uncertainty and essentially the perfect long storm. His framing, of course, reflects a confluence of several factors that will be with us for some time and which are driving significant structural geopolitical shifts that I think that we should all be aware of. These, of course, range from the rupture in the systems of rules that govern global stability and the heightened and likely prolonged geopolitical insecurity that we're seeing all over. It's also slower growth. It's also a climate crisis and where the impacts are being felt all around and where there is an awakening of citizens as these impacts are becoming more material, not only in developing countries, but also in developed countries. All of this is, of course, occurring against the backdrop of enhanced fragility, coming out of divergences that we are seeing in growth and well-being, both within societies and across the world. This means that investing for the future has therefore become a much more complex game as governments, communities, businesses seek to navigate these choppy and unprecedented waters. But all of these issues also reflect the fact that we need to become better risk managers in order to pull back or at least better manage the tide of hurtling from one crisis to another and the sense of uncertainty that is enveloping so much of the world today. Importantly, we also need to address this if we are to actually fulfill the Sustainable Development Goals and have thriving, growing economies and communities. From my perspective, it means that we have to be more proactive about not only envisaging and thinking about what will be required for the world that we want to see, but also being proactive about building it. If we hone in on the climate crisis alone, we are in an era where we need to be carefully considering the kinds of protection systems and better insurance markets that can help drive greater stability. It is no longer going to be tenable to think that the resilience and adaptation agenda is one that we will get to later on, precisely because many of the assumptions that we hold regarding the levels of resilience and our adaptive capacity simply do not hold. Addressing the mitigation challenge is just as important and just as urgent as it is addressing the resilience and adaptation challenge. Likewise, when we consider the protection gap, it's no longer going to be tenable to consider the problem of others, the problem of the public sector, the problem of the private sector alone to solve, or developed or developing countries, as our systems and our societies are increasingly connected. Addressing these challenges, from my perspective, also goes right to the heart of the relevance of the insurance industry and its values, which is essentially centered on offering protection that allows people to take better risks and build the societies and the communities that they want. And we need to be proactive and deliberate about addressing this rather than being reactive. The fact is that the insurance industry has the heritage to take a leadership role in helping to tackle elements of these major global challenges. And at a time when the world and populations are looking for solutions and not just simply identification of problems. In earlier social and industrial transformations, public, private, and mutual insurance systems played a major role in protecting communities and institutions from excess risk and dislocation to enable a more orderly transition. Unfortunately, these examples from the earlier 20th century from Britain, the response to the US depression and post-war European and Asian reconstruction seem to be overlooked by economists, policymakers, and frankly, even the industry itself. If there is a message that I would like to leave you within the current context that we're existing in, is the fact that insurance is much more than a set of financial products. It's a framework for orderly progress and transition. And we must consider that in the broader picture that we currently exist in and how we can be even more relevant. And that is why within the IDF, we have sought to tackle this issue based on the recognition that it will require engagement with the public, private sector, civil society, and academia. It is in many ways also about rediscovering the potential scope, scale, and standing of the industry's core business and expertise to accelerate efforts focused on addressing the protection gap and spurring resilience and adaptation efforts with the sense of urgency that it requires and it deserves. Now that I've reflected a little bit on the context, I want to switch gears a little bit to offer some key recommendations around areas where I think that we can really start to accelerate efforts to help address the pressing problems around resilience and adaptation and the role that the insurance industry can play. First, the insurance sector has invaluable expertise and resources to resolve complex risk management challenges, and we need to be even more aggressive in putting these expertise to work and in a much more public way outside of our circles. As an example, applying our existing risk metrics and management tools to climate transition and resilience, and expanding that toolbox with innovative solutions to ensure a well-managed and more equitable transition. This will require a bit of reflection on the existing tools that we have, the need for their refinement, expanding them, improving on them to be even more relevant given the kinds of shocks and risks and the sense of uncertainty that we are currently faced with globally. Many of you within this meeting are knee-deep in efforts to address this challenge, and we are seeing some really interesting examples emerging. Within the IDF, the issue of improving the quality and the availability of risk analytics to support better decision aimed at driving resilience is central to our mandate. It is why our industry members launched the Global Risk Modeling Alliance as a public-private partnership on risk and resilience analytics with the V20 group of countries and with the support of the German government, with the objective of strengthening the risk analytic capabilities of these countries and also plugging critical information gaps. This program is currently supported by 10 industry members who provide multi-year funding, leveraging the finance from the German government, but also offering insurance industry technical capabilities. We have also supported the Global Resilience Index Initiative, which has as its objective to provide open, globally consistent climate risk data for governments and financial institutions to scale up climate adaptation, resilience, and loss and damage finance, and protect exposed communities and economies. As climate change accelerates, the stakes are getting higher for people, businesses, and governments around the world. Putting globally consistent numbers behind who and what is at risk and how people, prosperity, and the planet will be impacted is essential to guide capital investments in adaptation. These are just two practical operational programs that allow the public and the private sector to collaborate and address both deep structural and pragmatic operational issues that influence access to and quality of information that can be used to influence policy and also the flow of finance. This is insurance industry capability being leveraged to address a global challenge. The second area where I think we can really start to accelerate efforts to address resilience and adaptation is the fact that we need to urgently expand the availability of sustainable risk pools to protect populations and assets. All the actors of the risk-sharing domain, tax-based and premium-based from community programs to multinational level, need to be integrated in a public-private mutual risk-sharing continuum. Industrial transformations create risks and dislocations. As sectors retreat, regions decline, and long-established occupational skills become outmoded. The history of the cooperative and mutual insurance systems covering life, health, employment, and funeral insurance were created in the 19th century Industrial Revolution, I would say in Manchester, England. It protected urbanizing populations against the uncertainty of factory work and provided welfare for people uprooted from the support of family networks and rural communities. National insurance programs of the late 19th and 20th centuries in Germany and the UK were expanded post-war from 1945, when the welfare state and social security systems were introduced in response to the impacts of economies and populations in transition. In today's societies that face industrial and environmental shocks, it is going to be necessary to consider the updated landscape of public, private, and mutual social protection systems to support populations against a wide range of extreme social, environmental, and economic risks. It should be of general benefit to not only research and design, but also prepare potential insurance systems before major dislocations occur, rather than in response to an unprepared emergency context. Public, private, and mutual cooperative expertise and capital should be applied to develop optimum levels of alignments, incentives, and risk sharing at local, regional, and global scales, and across time scales and generations. It's a massive opportunity, but it also requires new public-private sector compacts globally as well as nationally. Again, we are seeing examples of this emerge. For example, the G7 and the G20 and the V20 Global Shield Against Climate Risks, which is built on cooperation, coordination, and addressing some very sticky issues around topics such as premium financing, given the reality and the challenges of the economic situations that many communities and governments are currently faced with. We're in an era that's ripe for innovation, but it's also ripe for public-private partnerships. Within the IDF, we have a number of programs that have served to address this in the context of developing and emerging markets, which are particularly complex, but also which can shed examples and insights into many things that we are now seeing in many developed markets, particularly with exposed and vulnerable communities. One such example within the IDF is our tripartite program with the German government and UNDP, where we set out the objective to work with 20 countries by 2025 to develop risk financing solutions to help manage the kinds of shocks and impacts that these governments are faced with. Currently, we're active in 23 countries, but these are complex programs that range from insuring public assets to providing insurance to smallholder farmers. The projects have expected total beneficiaries of 64 million people. The industry has committed $5 billion in offered capacity, and they've also co-invested with the German government approximately 30 million in the development and the refinement of these solutions. Beyond this partnership, we are also supporting a strengthening call for commitment to prearranged financing for crisis and expectations, with the objective that donor governments from developed countries can commit a significant percentage of their humanitarian spend to financing arrangements. The fact is that in 2022, we saw a humanitarian budget of $64 billion. Funding requirements for extreme weather are 8 times higher today than 20 years ago. Between 2017 and 2022, humanitarian appeals linked to extreme weather were only 54% funding, resulting in an estimate of 28 to 33 billion in shortfall. Of the financing that was triggered to effect response, only 1.3% was actually prearranged. This is a tremendous opportunity to demonstrate the value of insurance, to demonstrate the value of ex-ante financing instruments in a sector that is not necessarily the traditional counterpart, the humanitarian community. It's also an opportunity to address a global development challenge. It's an opportunity that could allow for more efficient leveraging of public resources, but it's also an opportunity to have material impact for communities and people who are at the brunt or the receiving end from these events. And I flag these opportunities and these programs as the kinds of complex programs that we need to increasingly see the industry engaging in and investing in. They are complex programs, they take time, but they are necessary if we are going to tackle the issues that we are seeing and the complexity of these issues when it comes to deepening resilience and addressing the protection gap. The third and final area where I think that we can really start to accelerate efforts in terms of the resilience and adaptation agenda is simply communicating the value of the insurance sector, public, private, and mutual,